right, everybody. Thanks for coming. Welcome to our webinar. Really appreciate your signing up. I'm going to go ahead and kick everything off today. My name is, as you probably all know, it's Jeff Gibby. Anyway, let's get straight to it. Today's webinar is designed to instruct you on using MetaStock and the accompanying software products. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. I almost have it all memorized. Unfortunately, this slide doesn't really, I forgot to add the disclaimer to it, but anyway, I'll read the full legal disclaimer in just a second. I want to talk a little bit about our guest speaker, Mark Leibovit. Mark's been a personal friend of mine for several years. I mean, I think we started doing business with him about 5 or 6 years ago, and he's a great guy, a very, very good market technician, been rated according to Timer Digest several times as a top market timer, and just somebody that has some really interesting takes on the market all of the time. So definitely somebody to pay attention to, definitely somebody you should look at and listen to. Let me go ahead and, as promised, we'll go ahead and get you out of this, and I'm just going to go ahead. I have to do this. It makes my lawyers happy. 5. Today's demonstration is designed this demonstration is designed, this isn't even a very well-worded disclaimer. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the VR add-on software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and VRTrader.com shall have no liability for any investment decisions based on the use of this software, any trading strategies, or any information provided in connection with the company. Didn't want to skip you guys out on a legal disclaimer. In any case, Mark, let's go ahead and get you live, if you don't mind.
Hi there, Jeff. You hear me?
Good. I can hear you great. I would recommend you adjust your volume levels. It sounds perfect to me. So let's go ahead and turn on the screen share for you. I'm going to go ahead and make you a presenter right now. Okay. And it should pop up a little note that says, do you want to share your screen? Just go ahead and click on yes. And I'll let you know when I can see it. Perfect.
So I got a disclaimer for you too, Jeff.
Oh, yeah, I actually just read this one. I'd recommend rewording the first line a little bit.
And there's my picture. Okay.
All right, good. Well, before I let you get going, how would you like to introduce yourself? I mean, go ahead and kind of tell us a little bit about what you do.
Okay, well, let's see here. Are you looking at the home page of my new updated website, Leibovit VR Newsletters? Used to be VRTrader.com, though that link still works, and we have, several products. We were offering this Vice News Raw weekly free report, which is a promo for our Vice letter, which is our entry into the cannabis space. Believe it or not, Jeff, we decided that we could cover the marijuana stocks, since many of them have been hot, some of the pharmaceuticals, as well as some more of the traditional names, in gaming and alcohol and so forth. But this is the website, and we have various products. We have our silver newsletter, which I think you see regularly, our daily market commentary, our platinum, which provides specific recommendations on top of the silver. We have our gold letter. We have our annual forecaster report, the Vice letter I just referred to in the book, The Trader's Book of Volume. And as far as my background is concerned, I've been doing this for a long time. Many of the old timers remember me as an elf on the old Rukeyser show and being on the nightly business report for 30 years with Paul Kangas. I used to be a market maker on the Chicago Board Options Exchange back in the mid-'70s. I was research director for a couple firms shown on the screen. And I'm really proud of the market timer designations. In fact, right now I'm the #1 bond timer according to Timer Digest in the U.S. I guess that's because I was more bullish on bonds and the street was negative, thinking rates had to go up right away. But I've also been, praised for being a top market timer. In fact, my biggest claim to fame in that realm is the 10-year period from 1997 to 2007. I was the #1 market timer in that intermediate category. So I'm very proud of that, considering all the competition out there, Jeff. So thank you for letting me introduce myself there. But meanwhile, the focus of this presentation is the volume reversal toolkit, and that's available here on MetaStock. I believe, Jeff, if I'm not incorrect, there's a 1-month free trial still available. So any of you who have not signed up, I encourage you to do so. This is the basis for most of the trades that I do, and we can jump right into it. But there's 3 versions, and we'll talk about the volume reversal in a moment. But basically, we have 3 versions that are offered as part of the kit, which cover my sequential, directional, and 2-day interpretations of the volume reversal. So when you get a chance, go to the website, and if you, like I say, don't have it already, a free trial is available. So let's just move on here. I just summarized that for you right here with the 3 versions. So what's a volume reversal? I mean, that's really what this is all about. This is a claim to fame for me in the last 35 years as from a floor trader on the CBOE, watching volume patterns in the market and trying to figure out, when the smart money was trying to move and get in or get out of the market. And it's a trading tool on the intermediate basis. On the weekly and monthly charts, you can see some patterns, and we'll show a couple here that give you intermediate calls. But I'm basically a shorter term trader. My viewpoint is, in and out over a couple trading days or more. I view this as a, way of making a living, not as a, get rich long-term investment strategy. I learned this when I was on the floor, where some of the floor traders that I idealized literally went home flat, no positions every night, came in fresh every day, looked for various patterns in the market or floor, volume and order flow, and just, saw this as a paycheck, so to speak. So this is really the way I look at the market, but you can use this tool, for several days or weeks, as you can see as well, but it gives you a good sense of when, buyers shift to sellers or sellers shift to buyers in the market. So we have 3 versions. The first is a sequential, and without reading all the copy on the screen, basically the sequential posts all positive and negative volume reversals, and this is what I like to use for myself, and this is what I use mostly in these demos that we're seeing today, though I will show you an example of the other 2. I just like to see everything that's going on without any filters, so that's really what the sequential is. And this is just a very rough old chart, not a I think it is a MetaStock chart. Basically, we just posted some notes on here, and what you're looking here is a weekly chart of palladium from a few years ago, and a positive volume reversal comes in, and then obviously a nice trend starts to come as a result of that, and then there's a second one several weeks later and a third one. So this shows all the volume reversals that occurred during this time frame. In this instance, of course, it confirmed a very nice uptrend, and there were no if there were negatives in there, you would have seen them. So basically, this kept you long if you just use the volume as your trigger. And when you see my charts, as you are seeing now, and you'll see a few of the MetaStock charts a little more detailed in a moment, I'm really not looking at a lot of other indicators. I'm really pretty much focusing on the volume change as a good sense that this is where the smart money is coming into play. In this example here, this is, again, an old example. You can see that you would have been long palladium for several weeks until the negative came in here in May 2006 and then changed the trend. And as simple as that sounds, as powerful as that is, in fact, we just saw this pattern in the U.S. stock market where suddenly negative volume came in and the market went off a cliff, very much as this pattern in palladium from several years ago. Part of the advantages of using a MetaStock is that we have these little window boxes that pop up that give you instruction on what to do. So in this particular example, if you clicked on the little negative VR here, this box would have popped up and it told you, as I'm circling here, negative VR signal, go short, and it gives you a stop point right away. So basically, little instructions are given on each of the signal by hitting the little command here on the screen. It's I forget the exact term for the command when you pop it open. It's very clear to open the box, and it tells you which, what the instructions are at that time. The directional is the other version that we have. The directional, without again reading all the words on the screen, is the sequential, but what we do is we filter out repetitive volume reversals, essentially. A little more details to it than that. It only shows newly generated VRs in the opposite direction, or if a previous VR has been stopped out, but it does provide a filter for you. In addition, it provides a stop as well, so it goes into a little more detail, and certainly I would encourage you to take a look at it, which I don't really pay a lot of attention to because I know where my stops are mentally, just from doing this for 35 years and reading chart patterns, but this gives you a little bit more guidance. So here's an example Again, this is just a bare bones example, but this is from a COMEX 60-minute chart. And just backing up a second, I should remind you that the VR can be applied in all time frames. I just showed you a weekly chart for palladium. Now is a 60-minute chart for COMEX gold, 5-minute charts, anything you prefer. I tend to focus more on the daily charts myself, but it is applicable in all time frames, and I would encourage you to test it, of course. Take a look and see how it works in those various time frames. One of the advantages of working with MetaStock, of course, is the ability to post various time frames, which before having it programmed this way really didn't give us that opportunity to see how the VR worked in other time frames. But in this example here, not that I want to digress that much, but this is the directional. And what's happening here is this is negative volume reversal comes in. These little dotted lines pretty much present the stop that you'll be looking at. So here you filtered out a lot of the noise. In this extreme example here on the 60-minute chart, you had a positive VR. Theoretically, you're along this entire time frame because any conflicting VRs would have been posted here, and they weren't, and finally a negative VR was posted, and a little dotted line said, well, you get short here, and that's your stop. So that's just how the directional, in a nutshell, works, but I'll show you another example in a minute. So here's the same example again. When you clicked on it, little box opened up. So it basically tells you a negative VR has been generated, enter a short position, and it provides you a stop. So this is the backing up a second, the same example, and then we just move forward one box, and we clicked on the little negative VR, and there's a little command that comes up, and you click it, and it gives you the instruction. But it's simple when you think about it. All I'm really saying is get a negative VR, and the criteria is there: go short, and positive VR, go long. But I'll go into a little bit more detail in a moment. So the 2-day version is the final version that is available, and this came up because of my comment earlier. Well, the VR is good for a short-term trade. Really, what time frame are we talking about? And I did a lot of testing over the years, but relatively speaking, you know, if you're getting a positive or negative VR, you expect immediate gratification. You expect the stock or index to move in that negative or positive direction right away. So we created this tool that basically on 2 days you're out of the trade, regardless of whether it continued on or not. We just said, well, if a negative VR comes in, criteria is met there, get short, and 2 days later you're just out of the trade, period. And of course you'll see many instances where the stock or index will continue moving, but this was based on the concept, let's take a 2-day trade and don't even worry about, you know, where the stock or index may have gone. This is a little skeleton chart we put together. So for example, on the 2-day, if you get a negative VR here and you get short, a little blue symbol comes up on your screen and says that's where you get out 2 days later, just reminding you that it's 2 days. Negative VR, you get a little blue dot on your screen and tells you to get out. Positive VR, 2 days later, get out. Positive VR, 2 days later, you're out. So that's really what you see on the 2-day version, in addition to a couple of other indicators that you might want to put up for yourself, like moving averages and so forth. But it just signals that after the VR, we're taking a trade. And this is, of course, a hypothetical example you're looking at, but that's the theory. So here's a more practical example. This is a Google chart. Again, it's an old one, but these are good skeleton charts, so to speak, so I like to use them, showing the 2-day in application here. And this is a daily chart of Google, and in the middle of the screen you've got a dramatic example where positive volume reversal came in. 2 days later, you're out automatically based on the 2-day rule, even though it did continue a bit further. Negative VR here back in mid-September of that year, where 2 days later you're out immediately. Here's an example in early September, positive VR, 2 days out, you're out of the trade, even though it did continue higher. Here's another example, positive VR, you're out 2 days later, positive VR out 2 days later. And obviously, in this example here I'm circling, there wasn't much of a profit in that trade, though you did get back in a couple of days later. So obviously nothing's 100%, but you can see the strong correlation here. I would say it's closer to 80 or 90% that you get follow through following the volume reversal. So this is the 2-day, just as a rough example of what the theory is using that. So now we're going to get to more specific examples. And first we're going to look at is the Dow Industrials. This is the DIA. This is, I think, as of last night. It's not today's chart because today we had a little rally in the market. So what I've done here, it's colored because I put a colored background on, and these are things you could play with for your own use. But what I've added here that I haven't talked about up to this moment is this stochastic, and this is a 533 stochastic. And you might find another momentum indicator or oscillator that you enjoy using more. I've been very comfortable with this 533 over the years. And I wouldn't say it's a confirming indicator, but it's something that I look at as a general rule. If I have a 533 and a negative formation coming down, the fast crossing over the slow, and I have a negative volume reversal, it gives me a little better confidence that I have momentum and volume working for me. And here's, the Dow, just before the big crash we saw in the last week or so, negative VR comes in, you had a declining stochastic, and you got short. Now, you had no way of knowing you're going to get a crash, though there are other indications we were coming down, including all these other negative VRs that were forming prior to it, and that's one of the reasons I've been a little bearish on the market, because you had declining peaks and you had a lot of negative VRs. You were trading under both the 15 200-day moving average, which is more conventional wisdom. So this is not rocket science, but the basic trigger, of course, is the volume coming in. So this is how the DIA had acted, and we can just like scan examples here, but you can see, generally speaking, get a positive VR. This is back in June. You get a couple, 1 or 2 day move to the upside, negative VR down for a day or two. No real follow through on this one. Nice little negative VR here in late June. Nice 2-3 day decline. So on a trading basis, this is the kind of indicator I'm looking for, where in this particular instance you have a negative VR. As you can see, the 533 stochastic turned south, and there was a day or 2 or 3 trade here, depending on how long you want to stay with the trade. Again, I generally look for a couple day trade in these things, and even here with the crash scenario, I guess we got short. Even for a couple days, you had a nice profit. Whether you stayed for the big day where we were down 1,100 points in the morning, that's another story. But certainly, it worked out really nicely here on a very short-term basis. So I'm going to move on now to the same chart, and we're putting up the directional version of the same chart, so you can see the comparison. Though like I say, I tend to use the sequential more, but we've added here is it's the same chart. We put on the directional indication, and what in this particular instance, it's it's filtering out repetitive volume reversals until another one comes in a sequence. And you have this little box here where you can click on it, and it'll give you the instructions here. So on September 1st, it gave you a little instruction short, and I think this was one right here, and it told you where the stop was. And the general rule I use for stops on these things, and I'm not giving away any big secret here. I mean, the basic theory behind the volume reversal is if selling comes in, you really don't want it to go the opposite direction. So if I get a negative volume reversal here, I keep stops really close, really perhaps even to the high of the previous day, really, really tight in there, because if this is selling came in here, that would tell me the direction should be changing to the downside. And this positive VR I'm highlighting now, the stop would be just before the positive VR. In other words, if buyers came in and it's going to rally for a couple, 3 days, you really want to see that low hold. So that's the kind of thinking I have there. Now, these little blue dots you're seeing on the screen are your stops, okay? So it's telling you were stopped out of a trade at each of these points. I don't necessarily wait that long, so let's go look at an example here. And again, I'm talking to an audience which I assume is more on the sophisticated side and understands trading. So let's say here, this is in December, you're getting a negative volume reversal, you've got a downtrending stochastic, and you're short. You've got a nice 2 or 3, 4-day, multi-day decline. Of course, I've probably been out before that, and certainly if it got down to the 50-day moving average, which is this blue line, I certainly would have been out of the trade. This stop up here is assuming you stayed with it the whole way and rode it all the way back up again, okay? And that's based on the premise, again, negative VR here, that little high point just prior to it. I don't know if you can see it because I'm pointing to it with my little white arrow. That's essentially your stop, okay? So this is telling you if you fell asleep or you, went on vacation for 10 days and really wasn't paying attention to anything that was going on, you would have been stopped out of the trade because it came all the way back to that point, just the high just prior to where the negative volume came in. So this is just there, I guess, for your edification, so you know where your stop is. But in reality, you know where it is when you get in the trade. And if you got a nice move like this, I don't think you're going to ride it all the way back up again to your stop point. But that's the theory behind those little blue dots on the directional. And again, my motivation is more on the shorter term time frame anyway. But it's a powerful little tool, and that's really what I want you to see and understand if you're not familiar with it already, because it really, is not available in all software everywhere. There's only a couple places you can get the volume reversal, and MetaStock is certainly, the first place that I've been programmed to expose it. It was really proprietary for 30 years before Jeff Gibby and I hooked up, and we began the programming process here back in 2010, 2011. So it's a tool that you should add to your screen, and what other indicators you use. As you can see, I don't use very much, because what are we looking at? We're looking at a 200-day moving average, the green line. We're looking at a 50-day just for reference. And I put it on because everybody else looks at it. I want to know what people are thinking. If everybody gets excited that it crosses above a 50-day or below a 50-day, or the 200 held or didn't hold, I just want to have a sense of what the conventional wisdom is out there. So I just put that up for reference points. And I have my little 533 stochastic, and really there's very little else I'm looking at other than the change of volume. So let's move on. The same example again, the Dow, DIA. This is on the 2-day, okay? So this is the theory that we talked about a moment ago, that you're out 2 days regardless of what happened afterwards. You're not even concerned about that. You just take the trade. And if you're stopped out in the meantime, fine. But in the meantime, the little signals that you see on the screen, these little blue dots, are essentially giving you that indication. So let's look at the big crash scenario that we had here in the last 10 days or so. Negative VR comes in, and as I say, after a couple of days, I might have been out of the trade anyway, but the little blue dot came up and said, it's 2 days since your negative VR, and then according to the 2-day rule, you get out, okay? Something as straightforward as that, and that's all the little dot is about, to tell you to, take the trade and move on. And all these little dots here along the way are just signaling that it's 2 days following, like here's a positive VR, so 2 days later it's saying it's 2 days, folks, get out of the trade. It did go a little higher the next day, but it was just a little signal that it was a 2-day guide. So I don't want to make them more of it than it is, but something that we created, and some traders find it useful to know that that's a perspective we take. We're going to look at another example here. Here's the TLT, which is the 20-year bond ETF. This has a very high correlation in my work, and I trade it quite a bit because of that. I guess maybe the bond market is a little more honest than the stock market, where it doesn't whipsaw you as much. But you can see here why I was bullish on bonds, at least in recent weeks. And this is one of the reasons Timer Digest, I guess, put me as the #1 bond timer, but I'm not so smart, because I'm just watching the volume here, and the volume is telling you they're buyers in TLT, telling you the long bond is going higher. So you had a positive VR, a rising stochastic, and it kept you long. And then a negative VR comes in. It only turns out to be like a 1-day trade here, okay, even with a downtrending stochastic, and then it reversed right back up again. So in this particular instance, how do you handle a trade like that? I think it's a good moment to talk about that. Well, my stop is there because negative VR comes in. I don't want to see it go beyond that little high point, which it did here. So if I didn't get out with a trade in a day or so, or I got nervous here and got out quickly for whatever reason, then I would have been stopped out right in here, I suppose, in this area, because that's where the stop is. If this was a 2-day, you would have seen a little blue dot here, and if it was you'll see it in a directional in just a moment, where a little dot appears stopping you out. But anyway, getting back to the sequential, showing you all the VRs and kept you pretty much in the trend here, and even here, nice little trades along the way. You can see here negative VR, 2-day move to the downside, little negative VR, a couple-day moves to the downside. So just following the short-term momentum and volume, and trying to tie a little bit to this 533 stochastic gives you a great little trading tool. And even on a more near-term basis, it gave you a perspective that there was more of upside volume here in this entire rally from July until last week. You only had one little negative signal. And my own personal opinion is bonds could still go higher, though on a trading basis I'm not in it at the moment because I don't have a current volume reversal. But I don't see the Fed raising rates too much. In fact, my opinion that I've been expressing in my newsletter, if many of you read it, is I'm looking for QE4. I think with deflation going on in the world right now, things are a lot worse out there, and I think that's one of the reasons the markets came down. So either the plunge protection team is going to come in and support the market, or they're going to come in with QE4 or something. So, pretty dramatic in my opinion. So that's just one man's opinion here. And let's move on to the directional. So let's back up a second here so we could see that little trade. I'm just flashing back and forth. This is the trade that I showed you before where you had, it worked out for a day but wasn't the greatest trade. You had a little downtrending stochastic, but that little blue dot did appear here on the directional, which represents basically this little high point back here to the day before the VR. So this is the same chart, TLT, just adding the little stops in there, and say everything else is the same on the screen. You can touch the little negative VR, and that would, or positive VR, and give you a signal. So this box here, this is from August 11th. So I'm assuming it's this one right here. See that little heart there? I don't know if you see it or not. I'm circling it. That tells you that's the box you clicked, and that opened up down here. So that gave you instructions right there. It said positive VR has been generated, enter a long position, and that gives you your stop. So it got you long, and basically you weren't stopped out of this trade. It did trend higher for about a week or so higher using this this instruction. Now the same chart again, TLT on a 2-day. Again, we're just going over the examples here. So you have a choice of whether you want to use sequential, directional, or 2-day. But on the 2-day, you can see a lot of little blue dots here because every 2 days, you're taking a trade on the system. So positive VR here, looks like just in mid-July, 2 days later you're out. Negative VR, 2 days later you're out. In this case, you'd have been stopped out anyway. Positive VR, you can see just little 2-day buttons come in right after the move here. I want to show you, see a bigger one, well, this is a nice one here, negative VR. You're out 2 days later, and I guess you could have stayed with it because the negative VR came in again, and it could have gone lower. But nice example of how you get some nice follow-through after VR with a downtrending stochastic. Here you had a positive with an uptrending stochastic, and you had a nice 2-day move, though it did go a couple days more there. So the little 2-day button is useful. Let's move on. So here's some other examples. Basically, for the rest of the presentation, I got maybe another half dozen or so examples here, and then we're going to come in for questions, and we'll wind up the presentation. So we're already about halfway through the presentation right now. This is just Yum Brands, just an example. The stock came down, actually it was a week before the market had its bigger break, but a lot of negative VRs here. And one of the things that we do in the sequential version is we count the negative VRs if there's no intervening other positive signals. This is the case where it was negative signals. So you can see there was 1, 2, 3, 4, it counts 5. So it's telling you this stock was under distribution. There were sellers in this thing. And even though you saw it trending down under the 50-day, you had volume confirmation along the way. Plus, you had some trades, and that's what this is all about. Negative VR here, looks around the 13th of July. Nice drop for a couple, 3 days. You know, downtrending stochastic here, confirming it. Another 2-3 day trade here in later July, around the 21st of the month, and so forth. Let's see now, here's an example of a negative VR that I probably would not have taken, and this is using the 533 as sort of a guide. I'm looking at this negative VR here. I want to go short, but I don't really have a downtrending stochastic yet. It turns down a couple days later, tied to this other negative VR. So I probably would have taken that trade, and I try to see, the stochastic sort of confirm if I can with it. That really helps me out a little bit here. So. And even if you did take it, there really wasn't much of a loss on this particular trade anyway, because it was pretty much even for a day or two, and there wasn't any big dramatic move to the upside here. But it was a great tool, and it did help you out, as you can see here in Yum along the way. Here's FireEye. It's a big trading favorite. I've just put a few names up here that are familiar to many of you. I like these high momentum stocks, the ones that have a lot of stories around them, because when the volume comes in, you get some nice moves. Way back this past May, positive VR comes in, you had a dramatic move to the upside here. You're still in an uptrend at this time, though I probably been out of it for a couple-day trade. Negative VR comes in here, it looks like mid-June, and a nice little couple-day trade, and much more if you stayed with it, but you did have a little 533 stochastic confirming it. here in early July. Positive VR comes in. You have a nice 2 or 3 day trade. You have a rising stochastic. So, this is like money in the bank when you find stuff like this, because it just, what are you following? You're following, smart buyers that came in, changing momentum, in this case to the upside, and here back to the downside again. And whether it's a result of news stories or just insiders moving the stocks, I really don't pay much attention to that. I mean, I'm just trying to follow the momentum. And in cases of long and short, you have to use a little common sense. I'm assuming most of you are experienced in the market. If you have a nice long move like we had here, looks from mid-May into mid-June, and then you get a negative ER, you tend to take a trade like this because it's showing you a change in momentum and volume in that particular stock. Okay, but if a stock is already down a lot, like here it's been declining for a while, maybe I would take this trade or not when you think about it. I mean, it's already had a decline for, a couple of weeks here. You really want to catch negative ERs off tops like this, or you want to catch, a positive ER off maybe a little bit of a bottom after it's pulled back for a while. So that's the kind of thing I look for, negative ERs off after rally points, positive off reaction points down here, confirmed by the stochastic. Netflix, big favorite, of course, momentum stock. Usually you get some pretty honest signals here, and this is why I've used it. Going way back into the April-May period, you can see a series of positive VRs as it was trending up the whole way. Little negative VR comes in one day in early June, but it's immediately reversed. So if you had gotten short here, let's see, would you have been short? Well, maybe. The stochastic was down already, but it looks like it was starting to turn. But even if you did, you would have reversed yourself back to the long side and caught a nice move to the upside there. Nice, plays here, as you can see, with the positive volume coming in. This one here, this positive VR here, probably would not have taken the trade because you're not getting any, strong stochastic confirmation. Here you're getting nice stochastic confirmation with this negative VR. So I'm going to switch here to the weekly chart now. That's what I just did quickly. Again, to show you the the application even on a weekly chart. Very interesting here. If you just eyeball the chart, you can see on a weekly basis. This is tough for me as a trader because I really looked at the market, minute to minute or intraday. But this might be good for money managers. But I generally look at the weekly chart just to get a sense, of course, where the stock is and whether I'm getting any positive or negative confirmation in the volume. But just take a look at the signals here. Positive ER here in April in Netflix, and just confirming on a weekly chart, positive ERs all the way up. We didn't get a negative signal at the top, which I would like to have gotten, but you definitely got positives along the way. And on a weekly chart, you had a rising stochastic here for at least a short period of time that gave you some encouragement. You had a negative VR here on the weekly chart in February and March with a downtrending weekly. So again, going back to the comment about 15 minutes ago is, you look at each particular situation, you put up a daily, weekly, if you want to play 60 minutes, 5 minutes, and see if there's a good correlation with the volume and that time frame. I really designed, and maybe designed is a bad word, but I really got used to using the volume reversal on a daily chart, so that's really more my, my orientation. But as I said, I've been looking more and more and seeing a lot of correlations in the shorter time frames and even on the longer time frames like this one, so definitely you want to take a look at this. SGOL is your ETFS gold trust. This is for gold in Switzerland. This is one of our trading favorites. I also look at GLD, but sometimes you get a little more honest signals in the SGOL because I don't think it's manipulated as a GLD is. In any event, you can see there's a nice correlation here in the signals, and as of late, the gold's been showing positive volume. You can see here basically since early July, positive VRs coming in, rising stochastic. You got one negative signal, which immediately was reversed. So, and we're trading above the 50-day. So, look, gold's looking better. I'm not saying this is the big turn, but I'm more inclined to believe that it could be because it's down so much and everybody hates gold, and we're due for a bigger rally, in my opinion, over time. But in any event, the signals had been positive here. And prior, you had some nice trades to the downside along the way here, negative plays for a couple of days, bigger play here in early July, with negative VR coming in. But generally speaking, if I have a rising stochastic and a positive VR, I'll take the trade there. Negative VR like here, and a declining stochastic, I'll take the trade there. And would I stay with it, for this whole move? Probably not. But you might have other indicators that'll keep you in the position. What I'm trying to point out is it gives you the signal, and it gives you a good sense that you're following the current market momentum, which is important, of course. ACI, this is really interesting. This is Arch Coal. I'm putting up the monthly chart first just to show you where this stock has been. I didn't even know it was this high. Apparently, back in 2008, it was up at $750, $800 a share, and this thing got down to $1. And this is partly because of, there's a big story this past week. You may have read how George Soros politically has been against the coal stocks or supporting groups to really get coal out of our economic system. And then suddenly the story came out that he was buying Arch Coal, and I think it was Peabody Coal, and some claim he just was covering shorts, but that triggered a lot of interest. And we caught it here at VR Trader. We actually took a nice trade. Positive VR came in, and we had a rising stochastic, and we jumped in. I mean, literally it was $1 stock. When I looked at this thing coming off, $750 a share, I figured, well, it's got to be a few points in this thing, and sure enough, it went up, nearly 10 points. It went from $1 to 10 until yesterday, where it broke and a negative VR, and you had a downtrending stochastic. So I don't know if I'd short the stock here, but certainly I'd be out of the trade. You could be short, keeping a stop right here above that high. In any event, there was a nice play on the Soros story. Volume came in, and prior to that, you can see the negative volume was pretty much confirming the downtrend in Arch Coal. But I love these little stocks like this that are so beaten down, and if you can catch the volume coming into them, maybe coal is turning. Maybe if Republicans take over the White House next election, maybe coal industry will have a revival, or maybe coal is a buy down here. It's so cheap. So still heavily used in China, I know that. So that's really the main examples that I want to show you here, and just reminding you about the toolkit and its availability here on a free trial if you haven't done so already. So where are we now, Jeff? We're got about 18, 19 minutes left here, and I thought I'd leave a little open for questions if anybody has some questions, and rather than hear myself talk for 40 minutes straight. Any questions out there?
We do have some questions that you may have covered, but Shakti asked, can we use the indicator for silver and gold?
Absolutely, yeah. If you pull up the silver and gold chart, well, I just put up. Let me move MetaStock onto the screen here, and I don't have this symbol. If he's referring to the futures, Jeff, you'll have to help me with the future symbol. But I generally, put up GLD here, for example, and let's put it up here. And I just had SGOL up, which was the example for gold using the Swiss market. So I'm waiting for this to come up. Maybe I had to sign back in again on it, and it's not coming up this second. Okay. Waiting for data. Let's see, I'm just put up another stock here to see if I'm have to re-sign on. Jeff, I'm not getting the data, so maybe I have to sign back on to MetaStock here. So bear with me a second, folks, if that's the case.
Yeah, that's probably the case. Every time it seems like I have to restart it when my computer goes to sleep. So
I'm going to restart it, so give me a minute to get it back up again. In any event, yes, the answer is yes, silver and gold. The futures, it works on silver and gold. It works and anywhere you've got volume coming in, and you definitely, you definitely want to take advantage of, using it in all mediums. So if I can, we find it up here. Let's sign in again to see if we get current data here.
go ahead and click on sign in.
There we go. I turned it on before the broadcast, and I assumed it was still live when.
Okay. All right, looks like it didn't shut down all the way. The first time, it takes a few minutes sometimes. So let's try
Any,
this.
any other questions? We can try to just talk about any questions besides the chart itself until we get something up here. Okay, I got it open now. It's opening up on my other screen, so give me a second.
Cool. There we go. That looks nice.
All right, so what I was trying to put up there, GLD, I think, because he asked about gold, but I don't have the symbol for the futures in front of me here. So failed to open document, error opening file,
Huh.
GLD. I don't think my internet reception's down, but I
No,
think it's
you're
all
not
probably
because you're
coming. Here we.
broadcasting. There we go.
All right. So anyway, that was GLD, and I pre-programmed a lot of the various templates that I use. So so here's GLD. I hope this is a good surrogate for you for the gold, but essentially you're looking. Can blow it up here a little bit. It's the same pattern pretty much that we saw in the SGOL. You can see positive VRs here confirming the short-term uptrend in gold right near. Of course, this is from yesterday, this is today. This is today's chart. So basically, you have a rising stochastic, a positive VR. So I would be positive on gold. Now, of course, where's your stop? And then it depends how tight you want to keep it, but generally you keep it right here, which is the low from the 31st, okay? Looking at GLD. And if you want to be a little more bold about it, you can go all the way back to your stops here under previous low points. But on a trade, you generally want to keep a relatively tight stop, but looks okay to me here in terms of the positive volume. Any other questions?
Yeah, let's see. Jonathan says it looks really easy the way that you're explaining it. So I don't think that's really a question, but I think you've done a great job myself too today, Mark. Um,
Very simple indicator, Jeff. You've been around it for 5, 6 years. I mean, it's not rocket scientist. You're getting a little VR. It tells buyers are coming in or sellers are coming in on the negative, and then you put it up on your screen. And I assume a lot of our listeners, viewers, use other indicators as well. But adding this to their arsenal, I think is a great confirming or denying indicator for your trades. And if you get that VR behind your trend, up or down, it's very powerful.
Jonathan asks us another question. What's the difference in using directional versus sequential? Uh, should I be using weekly versus daily versus 2 days?
Okay, that's a lot of questions.
It is.
The sequential, I'll summarize again. The sequential is what you're looking at the screen right now. It shows all positive and negative VRs, okay? And if I put the directional on the screen now, it would filter out repetitive VRs, and it would also provide you a little stop. As you can see on this screen, there's no blue dots, there's no stop shown, and all the VRs are being shown. So directional provides you a little bit more information, with the stop. The 2-day is similar to the directional. You're getting a little blue dot there telling you every 2 days you should be out of a trade if it's a positive VR, 2 days later negative, and it's also giving you a little stop point as well, so also giving you some more information. So yeah, I encourage you to look at all three. But I don't know if you need the 2-day. I mean, mentally you can say to yourself, I'm getting a VR, and for a couple of days I'm taking a trade in it and I get out. So like here I'm circling GLD. If I got a positive VR here, I would say to myself, 2 days later I'm just going to take the trade, and you've been pretty good in defining within a day a little top there. So 2 days just gives you a 2-day button, so to speak, but the directional does add that stop for you, which is useful if you're not clear of where you would keep a stop. But again, I'll summarize that again for you. The stop, it's not rocket science. I'll circle here to this example here. And when was this? Let's see. I'm highlighting it. That's July 7th. Okay, there was a negative VR. Okay, and if you were going to take that trade, I probably wouldn't have taken it because the stochastic wasn't going down at that point. I might have jumped in over here, but if you took the trade, okay, so where's your stop? So your stop is basically the high from the day before, okay? In this case, if you took that trade and you were patient, you did make money with it. The volume was saying that the trend was going down, but where's your stop? Well, if volume is coming here to the downside, it's reversing from the previous positive, and you really don't want to see it go up because it's telling you sellers came in. So I keep a very tight stop. It's pretty much to the bar before, where the VR had come from. And it's pretty straightforward, and for most instances you can see that works very well. And if you can get that stochastic confirming, all the better. So I would encourage you to use the sequential because it shows everything that's going on, but if you need to stop, either conform to the idea that I just gave you about a tight stop within a bar of where the VR was formed, or put up the directional and look at the little blue dot.
Cool. Great. Here's a little bit of a tricky one from Ken Gray. Ken Gray asks, how does your volume studies compare to volume weighted average price or market profile?
Okay, well, it's completely different because I'm not averaging any volume. I'm taking the absolute volume. I've done a lot. You might want to look at my book. We actually go into detail in that in the Trader's Book of Volume, which doesn't make me a lot of money if you buy the book, but I think it's very educational for you. It's really an encyclopedia of all the volume indicators, including Joe Granville's on balance volume, and Mark Chaikin's volume, and a lot of other volume studies have been done over the years. But it's basically raw volume you're looking at here. You're just looking at the volume that's occurring that particular day, okay? This is sellers came in this particular day, buyers came in this particular day, so it's a raw, that's why I call it volume reversal. Volume is confirming price as the stock is moving higher, or confirming price as volume is increasing to the downside. So just a raw response. And I got this from my floor trading experience years ago. I'm on the floor and you suddenly see buyers come in and you see price starting to move and volume coming in, and then the trend suddenly changes. You realize that there are forces behind the move, and the force is the volume. So that's really my key in calling the the absolute movement at that moment in time. And what I like about it, it tends to be a very good leading indicator. In other words, a lot of traders who say, well, I'm not going to buy a stock until it's above its 50-day moving average. But you look at the instance here of gold. I mean, it's literally calling the bottom of the move that we saw in gold here in the last couple, 3 weeks. But it was about a $100 rally in gold. I'm not saying it's a big move. Maybe it is. I'm more bullish than bearish, as I said a moment ago. But look at the fact that you've got a VR literally virtually at the low before the move starts. Just that smart money was coming in, and that's really what my floor trading experience and what the VR tries to define is, that it's that moment, and someone hit a button somewhere, whether it's Goldman Sachs or whether it's Merrill or any of the big firms decided that they're going to jump in, or it's a hedge fund. Maybe it's George Soros coming in the way he did with Arch Coal this past week, buying, taking a position or covering short. So it's a reaction to what's happening short term. It's not a moving average. It's not an average of anything. It's a pure raw piece of data.
That is the end of the questions, except for one that I'll take on. There's a question involving the cost on MetaStock, and actually that's what I wanted to talk about. And so if you don't mind, Mark, I'm going to go ahead and take over the presentation and just share the rest of my PowerPoint to kind of go through pricing and kind of the extended trials that we offer.
My pleasure, and thank you for having me, Jeff, and thank you all for listening to the presentation today.
No problem. Good job. Okay,
Thank you.
let's go ahead and do that. Mark, I would recommend probably muting your mic. I'm going to go ahead and take control of the screen. And we'll go ahead and show my screen. I just want to make sure I'm showing the right one. You guys should be able to see my MetaStock chart. So let's go ahead and do that and make a few adjustments here. Boom. Okay. Let's go ahead and kind of switch through this a little bit. Okay, so just to kind of cover what's included with the VR indicator, it has the three systems that we talked about, the directional expert, the sequential expert, and then the 2-day expert. They're just three takes. They all use the VR signals. If you don't know much about MetaStock, one of the things I love about it is the ability to go in and find these particular scans on a setups on a scan market. So if in the case of you, Shakti, and you're new to MetaStock and you kind of are wondering what the big features are, well, the ability to obviously kind of see the signals painted on the chart is obviously very cool. The ability to actually kind of go ahead and click on them and be able to see advice on where you should put your stops if you want to take a trade, and that kind of stuff is also very, very cool. But I'd say a lot of our customers actually buy MetaStock because it does allow you, if this is something that you like, it allows you to go ahead and do a full market scan on any of the markets that you're interested in, whether that's here in the US or in Europe. I know a couple of you said you were in Europe, Middle East area. But we do have about 198 markets that we cover through our partnership that we've got with Thomson Reuters. And this is very applicable, and you can go ahead and run that and apply it to whatever market you're interested in. So it's very, very cool. Here's an example of the expert signals. This is actually, I'm using kind of one of the things that we created for a demo a few years ago. There's a demo that I created that's up online. To get to pricing, the VR Trader itself is $99 a month. You can prepay that for a whole year and get I think it's about a 20% discount, $9.90 for the year. What we're offering with the VR Trader is if you want to do a monthly subscription to that today, it'll cost you about $99 per month, and we'll actually give it to you for 3 months. So basically, geez, looking at the calendar, I can't believe it's September already. You'll be running this thing into Christmas time, October, November, December 2nd. So for $33 a month, you can go ahead and get the VR Trader and add it to your existing MetaStock subscription. To answer your other question, we have a couple of versions of MetaStock. Our lowest costing version of MetaStock has actually been rated #1 in its price category for 23 years in a row. I'm sorry, I got the number wrong. It's 21 years in a row, not 23. 21 years in a row. It's still a long time. By the readers of Stocks and Commodities. It's a great platform. I've been using it for the last, oh gosh, how long have I worked here? Almost 20 years. And you're going to love it. That version of the software is only $60 a month. So you pay $59 per month or $20 a month on the extended trial, because if you buy 1 month, we'll go ahead and give you 2 additional months for a total of 3 months. And that gives you plenty of time to learn, how to run the scans, how to use MetaStock. It's a huge, the reason we like to do it this way is it's a very big platform. We've been working on it since 1980. And it's a very simple equation for you as well. If it helps you make money, it's going to be worth it, and you're going to keep it. And quite frankly, you wouldn't be able to get my copy of MetaStock from me. So that's what I'd recommend. Go ahead and try it on the buy 1, get 2 free. After that, if you decide, there are some different options that are available for you, but this allows you to make sure that you're not spending a lot of money to try it. You're getting a huge amount of time to try it, and if you really, really like it, like I do, then you're going to be able to kind of continue with your subscription or go to the annual rate and that kind of stuff. So if you have questions, the best thing that I would recommend that you do is you can give us a call at 800-252-9901. You can email us at sales@metastock.com. This is actually a really old PowerPoint. I didn't notice. Use sales@metastock.com, not sales@equus.com. And if you go onto our website, metastock.com, let's say that you're overseas and you want to chat with somebody, or you want somebody to call you, just go to metastock.com, and on the products page, there's going to be a button that you can click on to chat with one of our sales representatives. So there you go. Trey says soon to be 23. Okay, so in any case, I want to say to all of you guys, thanks for coming. Great attendance tonight, great participation. I want to thank Mark for coming in. It's always great to have him. He actually asked if he could come in, and I thought, wow, it's been a long time. We should bring you back in and have you do class with us. So I hope you enjoyed it, and if you have any feedback, feel free to get a hold of us and let us know. Okay, thanks guys, appreciate it, and we'll see you at the next one.